All right, good morning, everyone. It is 8:43 on the morning of October 31st, 2022, and this is my pre-market strategy session. So, happy Halloween, everyone. It's a great day to be alive. All right. So I'm starting today with the chart, the Qs, and I like the Qs. I like the Qs a lot. And the reason I like the Qs, actually, I like the NASDAQ a lot. And the reason, well, there are a lot of reasons I like the NASDAQ, but essentially in 2007, I started after the crash in 2007, I started investing in the NASDAQ pretty regularly. And it's been nice. It's been good, you know. So here we go with the Qs. Now the Qs don't go as far back as the NASDAQ, of course. But here I have a chart of the Qs, and it's a monthly chart that goes back into 99 or 98? 99. Goes back into 99. And I put a Fibonacci, right, on this chart. And this is the low back here in September of 2002 that the Qs put on. Qs put on a low down here at 21 bucks or so, something like that. Let's see. The low was $20. $20 on the Qs. To the high, to the recent high here in November of 2021. So it's almost 20 years. September to November, a little bit more than 19 years of monthly chart data, right? And what we have here are a couple of interesting things. Now, the most interesting thing that has happened in recent history in November here, or actually Monday, October, in November, is this bounce off of the 38.2, or or what could be. I mean, it depends on how you look at it. 38.2 or 61.8 Fibonacci, which is a lot of people really like this Fibonacci. If you're looking at it from one direction, it's 61.8, the other direction is 38.2. And, a pretty strong reaction, a pretty strong bounce there after crossing down below it. It came right back up above it. So that's one thing happening here. And then another thing that is happening is, let's take that Fibonacci off real quick, and we'll go to these horizontal lines. I'm not so interested. Let's look at this trend line here real quick. So this trend line, generally speaking, is going to be the trajectory of the Qs for the foreseeable future. And on the market, that means somewhere between 6 to 12 months. The title of the video is Bear Market Rallies, and it's really quite possible and probable, actually, that we see it rally back up to 311.66 here, try and break through that level. I don't know. The levels that I have marked off right now for this range that we're looking at is the top end of the range. I have it 297.60. In the short term, sure, this thing can rally in a little bit more of a long term. Now, long term usually means 5 years plus. But in the next 6 to 12 months, I expect to see the Qs follow this red trend line right here. In the meantime, though, things can move in the opposite direction for a sustained period of time. Of course, the old saying goes, the market can remain, irrational longer than I can stay liquid. So, yay. Yay, right? So here we have, we're in the middle of this range right here, a range that was put in back here between, August of 2020, 2 years ago, to November of 2020. The more coincidences that you can stack up at any sort of price or range or so forth, the better. So here again, we have a bounce off of the 61.8 on a monthly basis for a long-term chart. And it's quite possible it could go up here to 311. I think it's going to fall short of that. But in the meantime, I'm letting my portfolio, I've got a long portfolio, and I'm letting that do the work. When it comes time for this thing to start turning around again and start breaking down below levels again, I'll use my trading portfolio, my trading account, in order to pad and hedge my portfolio. But for the time being, it is not looking bearish. Short term, longer term, bigger picture, definitely looking bearish. Short term, say the next 30 days or so, it is looking bullish. Short term, it is looking bullish. So I will be using my 1 minute and 10 minute RSI indicators in conjunction on the Qs, in conjunction with the VIX 1 minute and 10 minute RSI. That strategy to just take short term profits. And I'm looking for the long side. I'm looking for long side setups. So I'm looking for the market to go into, or to start coming out of oversold on the 1 minute and 10 minute at the same time that the VIX is coming out of overbought on the 1 minute and 10 minute. And that's it. That's basically all that I've got going on today for the most part. The Qs have been a great place to trade here now for, the past 6 months, almost a year actually. What else is going on? Oh yeah, Bitcoin is doing a really neat thing here. Now I don't trade Bitcoin. I do a little bit of mining. I forgot actually. I still have a one mining operation going that I'd completely forgotten about. I've got a computer that's running upstairs. It's just a CPU mining for XMR. And XMR is an interesting one. This is a fairly high. This XMR has a fairly high security kind of baked into its algorithm, and it's just kind of constantly running. I haven't mined Ravencoin in a long time. So, okay. The 10-2 spread here is still inverted. And now this can remain inverted for a considerable amount of time until we see a real reaction on the market. And I've got these inverted areas circled down here. And then it's not until the yield curve, the 10-2 delta, starts to normalize that we actually see the crash on the markets. And so, for example, in July of 90, January of 2001, and then June of 2007 is when we started to see the real market crashes, and that's when the yield curve started to normalize. So we haven't seen the real crash yet. This is just a prelude. What you're seeing here on this daily chart is just a prelude of what's to come. It will get interesting, no doubt. It will get very interesting. Oh yeah, the 297 is the high end and 268 is the low end for the Qs that I have for this range. I think we're going to see over the next 30 to 60 days. Once this thing can stay down here for a year and a half, as an example in 2001 and 2007, just be patient, for the real bearish part of the move, the market's move. In the meantime, it can rally. Things can rally while, the market can rally while the yield curve is inverted. So the all-time, what I have according to this chart, negative .699 is the record delta between the 10s and the 2s, and this goes back to 88, Monday, February of 88. And so I don't see any reason for it to be any different this time, I expect it to break down below this negative 699, which is bearish. People are piling into the 10-year in order to, the 10-year is extremely liquid, and people are piling into it and bringing that rate down, and they're not piling into the 2-year, and it's causing the 2-year to yield more. It's interesting here. We have this sort of oversold condition here on the 10-year, 2-year delta. I don't know what to make of that, to be perfectly honest with you. I don't really know, what that says. I don't have enough experience staring at the 10-2. I mean, I can go back and look here, but it doesn't really seem to be much of an indicator, really. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.